Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. And it's a Super Bowl weekend, so we have to look for some great, outstanding plays. Please subscribe to my articles and Twitter feed to stay updated throughout the week. And again, this bull market keeps climbing. I was getting a little puck shy on Wednesday morning, but the Fed just bowled me over and went right over the top. For our agenda today, and that would be better. For our agenda today, I want to cover off the SPX and what a Fed. Basically, if we're below the 200, they want to keep the market happy. So I think that's what we got. Major ETFs. It's month end, so it's a good time to flip through the major ETFs and see what's working. Solar stocks are starting to rise with the sun here. They're really perking up. We got a Chart Watchers article this weekend, and if you don't know what Chart Watchers is, I want to make sure you do, because it's probably one of the most valuable, insightful pieces of technical commentary you can get. There's 7 or 8 artists or chartists writing in that every week. Actually, every second week. It comes out 24 times a year. And so we've got the second edition for you coming up this week, or third edition coming up for you this week. Just a brief look at oil and gold. And as always, thanks for watching this show. We appreciate your efforts. Okay, so here's the SPY. Let's get a little update. And what we see here is, market kind of surged off the for the open, pulled back a little bit and is working its way higher again. This is a 10-minute chart. We still have no lower high, so to speak. So everything's going quite swimmingly. And this is what makes the market really interesting today. We are at the 200-day moving average, and we haven't been there since December. So early December. So it's literally 2 trading months where we have not been up above the 200-day moving average, and so we're right at it. Moving average is at 271.58, and the current price is at 270.74. So we need to move up about another $1 on the SPY to get above it. So we'll see if we close above there. That should make for an interesting weekend newsletter. On the SPY, a few things. First of all, the scooter ranking. I always find this interesting. So the scooter, just in general, is about 2/3 of the market. So if you just invested in the S&P 500 using the SPY, you'd outperform. Roughly, it stays in trend, but for the most part, you're outperforming by about 2/3. So 60% of the stocks would be below, 63 or 64% would be below, and 36% above. So just investing in something like that would work. The reason this purple line accelerates a little bit is the SPY has the dividend reinvested in it, whereas the SPX does not. So we're comparing the SPY to the SPX, and that's why the SPY outperforms the SPX on a relatively smooth line. It's because of the dividends coming in. So here is the weekly, and you can see we're right up against the bottom of this 40-week moving average. And again, the 40-week is at 271.83. I mentioned this one was at 271.58. So the 40-week and the 200-day are similar, but not the same, just to make sure everybody's aware of that. And probably the best news is we got a higher high on the S&P, which is bullish. Now, the good news is, the SPY has never broken its uptrend. If I change this to SPX, has never changed from a bullish market. If we look at the point and figure for the S&P, we actually broke through the blue uptrend line. So that's the difference the dividend makes. Pulled down, and when we pulled down, that put this red line in place. And now that we've moved back above the red line, we have put a new blue line in place, and we are on a bull market for the S&P. So until that changes, this is bull market conditions, and that's what we'd obviously like to be in. Second thing I wanted to cover off is one of the things that's easy to do at month end is just say what was performing good last month. And I have a good friend in Montana, and she invests by just picking the top 3 stocks in the top 3 sectors every month and just puts a stop under them. And as long as they go up, she's happy. And it's a pretty simple strategy, and it works really well. It all depends on how active you want to be in the market. And so if that's the time frame you want to use, that's a nice little idea. The other way to do it is to just go in if you want to be an ETF investor. And Arthur Hill has put a whole bunch of chart packs you can download. This is the US major ETF listings, and you can just pull it down. And what I've done is I've sorted it by month. I've just sorted it by percentage change. And as you can see, the crude oil total return index is up 25%. So it was the best performer on the month. The oil stocks haven't been the best performer, but they've still been okay. And you're starting to see these income opportunities fund. They had big moves, like this is up 25%. But this solar ETF is one we're going to spend a little time drilling into today. And oil and gas, I continue to like them. I'm getting puck shy because we had the 400 down point days. Now we've had an up 500 Fed day. So with that kind of price action, it pretty much reverses my negative fears. But as the market goes forward here, one of the things that I think is also interesting is that, here's Brazil performing pretty well. Russia's performing pretty well. Argentina's another commodity-based country. So we're starting to see some of these other markets come to the forefront. And maybe it's because if Venezuela is having trouble producing oil, that Brazil will get the flow or Russia will get the flow, and it's starting to push up. And I've been talking about the Chinese internet group. This is up 16% this month. You can get by on that kind of stuff. Here's the biotech group, 16.24. And I think as a group, like the Chinese stocks are just going great guns. So anyway, there's lots that I like in there. Anyway, it never hurts to just go download this chart pack from Arthur Hill and grab it. And the idea behind the chart pack is just, there are a whole bunch of chart lists that you have already set up so that you don't have to go and try and create this major ETF listing. And Arthur does a great job of creating it. If you sort it based on the name, it will sort the groups based in sectors. And I think, I'm trying to remember, I think it's if you go to edit view. Yeah. So no, that's not it. Maybe I'm trying to remember, but somewhere, I just have to think about it. Maybe it's gallery, no, chart book. Yeah, chart book view, that was it. No, I don't know. Anyway, the point I was going to make is there's a little header that goes at the top of it all. And maybe it's just on your homepage that describes everything in that chart list and the order of information. But I think the important thing that you want to look for in here is trying to find, going through those lists and trying to find the stocks you want. So here's your chart list notes. That's kind of what I was trying to get to, and it disappears. So I don't know where it goes. Maybe it's all the way down at the bottom. Yeah, there it is. Okay, so Arthur's laid it out in this order, and it's very well done. But what you can do is just go through, and if it's China you want to go look at, you go to 10,500 and pull it up. Okay. Next thing, let's go. I just want to show you what a Chart Watchers newsletter is, because I think it's pretty valuable, and we don't talk about it a lot, but every now and then I think it's pretty important. So usually my homepage is the ticker cloud. So I like to go here, but right down here, you can join our free twice monthly Chart Watchers newsletter. So you can see my arrow here. Must read for all technical investors, and you put it in. And then from the blog articles, if you're a member, you see all of these as choices, and then you get John Murphy, Arthur's, and Martin's if you're a member. So you get, I'll call it primary, or you get content behind the paywall, specifically from Murphy. And I think he writes almost every day, and here's John's market message. And so there's lots of things going on here. Anyway, I would continue to watch, but one of the things in Chart Watchers, and again, you're going to get an email every 2 weeks, roughly every 2 weeks, 24 times a year, that shows all of the articles. And in here, you also get usually a John Murphy article and a Greg Schnell, I Did Railroads Are Rolling, but Julius de Kempenaar, Bowley, we all write into this article, and you can Again, it's one email. We don't blast anything out. There's no advertising that comes out. And it's a really strong newsletter. But more importantly, it's a bunch of technicians writing on the same day about the market at the same time. And you can get a cross-section of the opinion that's out there. Okay, I do want to cover off the solar stocks. And the reason is they've been flying as of late, or rising with the sun, so to speak. And the Jinko Solar is a stock we're going to look at quickly here, but I also put out a Don't Ignore This Chart article this morning. It should publish relatively soon, and as soon as it publishes, you'd be able to read more about it. But there's some great stuff going on in there. I think what we like on this one, Daqo New Energy, Chinese solar panel manufacturer, silicon manufacturer. I just briefly looked to see what they did. You can see that this stock is just breaking above this horizontal resistance level and is just trying to get through the 40-week this week. So maybe it chatters around here and gives a little bit of an opportunity for you to get involved in the stock directly. I'm going to switch it to 10 per page view. And again, from this view list, you can either go through all of these different components, but 10 per page is a pretty nice place to look. And this is a Canadian one called Boralex, and it's just starting to turn up, and it's been basically declining for 1 year, and now it's starting to perk back up again. And a lot of time at the end of the year, so here you go, this was a downtrend for 6 months, and then right at the beginning of the year, kind of got a new look, starting to take off to the upside, and these stocks have performed pretty well over time. Here's Canadian Solar breaking out to a new 2.5-year high. That's pretty bullish. It's pulling back today, and maybe that pullback gives you the opportunity to look at it again. China Recycling, don't think I want to enter that one. That looks a little beaten up. Here's Daqo First Solar. This chart's starting to perform, but it doesn't seem to have the jump that all the other ones do, and it's rolling over right now. I don't like it when the scooter ranking kind of stalls below 80. That typically isn't a great sign. I like it when it kind of flickers up, gives you a, hey, heads up, I'm starting to wake up here, and then kicks off and takes off to the upside. That's a really nice signal. So I'd like to see the scooter get a little stronger here. We are still below zero on a lot of these moving averages, and I mentioned it on the Wednesday show, Market Buzz show, that if your PPO can't get above zero and rolls over under zero, that's a very important piece of knowledge, and usually that leads to a sudden move down. When momentum is already zero and then the market rolls over, it's not usually good, and you can see that example here. So we were down below, we crossed up, and then we crossed back down, and this drop here was pretty quick for Hydrogenics. Here's Intergex Renewables, and it's trying to break out to new all-time highs. Got 1458. It's got to get through 1455, and if we just look for our previous high, 1465. So it made a new all-time high this week. You know, that's very, very helpful. And here's Jinko Solar, the one I wrote about this morning. And the reason I mentioned Jinko was just it has started to take off to the upside. It doesn't have a scooter ranking because it's not in large cap, mid cap, or small cap stock groups. So if it's not in one of those groups, it won't have one. But it's basically come up and stalled here, but it's quite interesting. I think if you get any sort of test of the 1250 level, you probably want to get back on board. Why I've got Microsoft in here, I'm not sure. That chart should just be deleted. Might as well do that. And I don't know if you knew this, but there's a garbage can that shows up if you go to the top right-hand corner, and you can just hit delete. Looking at the different ones, here's New Energy Technology, and I am trying to buy some windows in Arizona right now, and it is just crazy the numbers that I'm coming back with. So anyway, some of it is obviously the sun, but it's pretty amazing, all of the effort I'm going through to try and get windows. I used to sell windows and doors. Anyway, here is the solar window technologies, and I don't like the full stochastic rolling over at 50. That's very bearish to me, and I would be on caution, and you'll probably find that the PPO ends up following it down, so I would avoid that one. Northland Power, same thing. So Boralex, Intergex, and Northland Power, all three of these Canadian ones have been performing pretty well of late and all look like they want to start moving on to all-time highs. Ocean Power Technologies, nothing there, just avoid. Plug Power, this one is, it gets these sudden surges and then just drives you crazy with nothing for a year and a half. So I have trouble getting on board this one. The full stochastic rolling over below 50, that would be a hard avoid for me. Real Solar, hard avoid. Rena Solar, hard avoid. Solar Run, or Sun Run. And this one is, what I like about it is see how the full stochastic came up, pulled back, and made a higher low and didn't even get back down to 20. That's usually quite bullish, and we see that in here, and then the stock finally started its run. Scooter's up around 75, so I like that. And I like the fact that there's a downtrend here on the PPO that's at least 4 or 5 months long that can break. And I see how this is a long one and then this is a short one. So kind of you see the long downward momentum, and then you have this little short momentum and you kind of cross up here right at zero. This one looks quite nice to me. And just if you sit back and look at it generally, you've got this, it IPO'd, shook out, did nothing, broke out finally, and went on a really nice run. Let's call it $7 to $16. From $16, it's pulled back to 8 again, call it support. And it looks like it's now starting to build its second wave. So if this is wave 1, this is your wave 2 pullback, and then you make wave 3, and wave 3 is traditionally one of your bigger waves. That's a very simple wave count. I am no Elliottician, but the bottom line is this pullback right in here makes it pretty interesting, especially going back to IPO days. And it does suggest something is starting to improve with this stock. Okay, this low risk weighted ETF, that shouldn't be in here. I have no idea how I managed to drop those in there. My apologies. I thought I had checked this list. Okay, 10, here we go. This one's nice because it's been performing, and I mentioned earlier that on the major indexes, sorry, I should just scroll to the top this way. I want to set it to 1 month, and I want to sort by change. And it was this TAN ETF that was one of the best performing ETFs out there. So this is kind of what got me interested in going to look at solar, is let's check it out and then go in and look at the individual stocks. And this is very helpful to see this big 5-year wedge building, and we could take it out a little bit farther. Let's say 10 or 11 years to see when the ETF started. But, if we can start to finally break out of this big downtrend, there should be a big opportunity here. And I like the fact that the pullback this last time wasn't very big. So this was 45 to 15. This was 26 to 17. So this is a much tighter range, and I'd like to see that pop. So again, wait, but all of a sudden it starts to work. And when this starts to work, I think that can be really, really helpful. STR Holdings. And the way I went through these is I went and I picked up some of the stocks right in the ETFs themselves, or just Googled 10 top solar stocks, that kind of thing, and build your own chart list. Here's SunPower, and it was a name that was really associated with lots of good stuff, but you can clearly see the price action doesn't warrant looking at it yet. There's a lot of other ones that are much better to look at. Okay, here's Vestas Wind Systems. And on Vestas, I think I put it in here just to see if there was any difference. There's FAN, F-A-N as an ETF, and TAN. Vestas Wind Systems, this one's starting to perk up again, but it's been 3 years of dead money. But the PPO is above zero, so I like that. It's pointing higher. There's no real volume coming in, which is unfortunate because it's making a new 52-week high today, actually, and we're not getting any sort of volume response. So that's a little problematic. I'd like to see some volume start to show up on a 52-week high. So that stock's okay, nothing wrong with it. And they are huge, the manufacturer of those wind turbines. Vivint Solar hasn't done anything, kind of tracking sideways, so I think I'd just stay away from that one. Yingli Green Energy Holdings, clearly nothing you want to participate in. And I think we're back to the beginning. Yeah, Boralex. So with all of those stocks, one thing I want to show you on First Solar, so First Solar, again, now that we've looked at them all, is picking up, but it's this weakness up here on the scooter ranking that I can't really get into the top 25% performers, and the full stochastic is rolling over. This isn't bad, but maybe you need to wait for First Solar to come back down to the 10-week and then bounce out of here with a lot more vigor and make a higher low on the PPO or something like that. Usually this industry leader, I mean, this is 25 to 75 in 9 months, 200% return. So those are the kind of numbers we all like to live with. One of the other things is this Goldman Sachs Income Opportunity Fund, and there was also First Trust New Opportunities, MLP, and Energy Fund. And I went and looked at it, and it's mostly pipelines, and the pipelines had a great month in January. So I think it was stable cash flow, dividend yield, all that kind of stuff in a downward market, but they performed quite well. But they're getting right up against their 200-day moving average, so we'll see if there's anything more there. Not so sure there is. I did mention early on that some of the top performing country ETFs, Brazil, Russia, Argentina, are doing quite well, and their charts are really quite strong. But what you can see here is we've kind of had 3 equal waves down on the CRB, and it looks like we're trying to start heading higher. We're still not ready to cross this PPO downtrend line, so a kiss and a move back down here would be bearish confirmation that we're going to go lower, and obviously we wouldn't want to see the CRB break 2-year support. That would be problematic. So what I'm looking for, we're starting to see Canada actually outperform the US, and it could be brief or it could be long term. But again, if gold was going to keep rocking and oil was going to keep rocking, then that would be a very bullish sign. So here's GLD, and it's really been straight up all week, and today it's finally taken a day off. But it's been a great move higher. I think oil got up to 1330, and at 1330 with that, here, I'll just, rather than talk about it, put it on the chart. What you see here is there's a big 5-year base on gold. And what we're looking for is a breakout of this 1377 level. So 1330 is finally a move above this 1300, which has also been a big friction line. Let's shorten it to, say, 6 years, just to kind of zoom in on what we want to see. And with this, again, we are still in this basing pattern, but the big question is, if we're going to start to get through this 1370 level, and again, any move through that 1370 level, and I think gold will be a great thing to own for the year. I'd be very optimistic on owning gold-related assets. If we get through that 1370, until we do, it's a trade. Right now, it's been a great trade. Lots of the gold stocks really popped this week. And, as we get towards this 1350, 1370 level, I think you might start to see some friction come in. And what we want to know is, does it have the horsepower to get through? And of course, that would be Japanese yen as an important component. So we'll have to keep watching there. Just to reiterate, I did talk about the Chinese stocks earlier, and I keep just tweaking the list, adding a few more stocks to it. But, if we go to a summary mode, and I just want to say, whatever, 1 month, and look at some of these moves. This QTT has just flown. It's up 80%. Here's DQ. That was the solar company I just mentioned, up 50% on the month. JKS Solar up 52%. VIP up 39%. These are massive returns, and I have a feeling there's a lot more to come on these. So let's go look at QTT. This is an IPO, and it's just taken off. And if you've ever read How to Make Money in Stocks with William O'Neill, he talks about IPO stocks, and you want them to base, and then as they break out of the base, you should get your cup, in this case, a 2-week handle, and now starting to take off. Normally, you'd like the handle to be a little longer, but this stock seems to have a lot of emotion and looks like it wants to go already. So when you're at month end, and you could do it at any time because of the 1 month button, but it's always good to just analyze what's working. And I still continue to think there's a big opportunity in this whole China market sector. And it basically tells me that they think there's going to be a deal done between the US and China. And the value of that deal being done would obviously be huge to these stocks. And I don't think it doesn't look to me like the market's going to wait for the deal to get closed. They know that it's being worked on. And I don't think anybody wants to see those 25% tariffs at the end of February. So we'll probably see a big surge in China news, which will make it very whippy. But still, we should have some great opportunities. And here's Alibaba. And one of the reasons I want to show you this is that it's up 22% on the month, no big deal. But it's this breakout of this horizontal support and resistance level in the last, just this week. But we're right at the 40-week moving average. So it's a little hard to buy it here. But again, when you start to get this stock on a roll, this was 86 to 206, 100% in one of the largest companies. Volume has been increasing over the last 4, 5, 6 weeks. So as the price has gone higher, the volume continues to show up. I really like that. I like the fact that this big downtrend is starting to be broken. Let's just draw the trend line in there. Yeah. And what we see here is just snap a trend line on there. And this is just being tested right now. Maybe I need to come down a little bit here, but you get the idea. What we want to see is this trend line being broken to the upside and that break. And I like this fact that there's a little whip here. This was a 6-month trend that broke. It just gave you a little whip and now starts to move higher. Very, very bullish. And again, breaking through this horizontal resistance at 160. Really nice move. If you got to 200, you're up 25%. So some really nice charts there. The one difficulty obviously we have is that a lot of the actual action in the stock happens during the day over in Asia. And so owning it in the US is a little more difficult. It's not impossible, but it's a little more difficult. And what we want to see obviously is a longer term view. So you don't take huge positions, you take a smaller position and you allow the stock to work. Don't try to get in on a lifetime windfall in one stock. But if you were spreading your stuff out, maybe it's something in solar and something in China and something in energy and something in pipelines and something in whatever, and take smaller positions, especially if you're doing weekly charts, because you're not trying to go in for 10 or 12%. You're trying to get that 100 or 200% move so you don't have to keep paying capital gains along the way. So there's a real opportunity, I think, here. So so next week or the next show we do on Wednesday, the thing I think we'll cover off is just go back and look at all of the international country ETFs and look at how they're starting to perform. And again, the important thing that I think is showing up there is that the commodity countries are starting to rise up, and that should be a big tell. So we want to talk about industrial metals, probably precious metals, but mostly industrial metals. BHP made a new 52-week high. So I think there's some good stuff happening on that front, and we'll continue to work towards that. So thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 a.m. Pacific time on StockCharts TV. You can also catch replays on the StockCharts YouTube channel or on StockCharts TV, which has a running list of technical charting informational shows. Thank you.
Is your portfolio positioned to profit from continued market volatility in 2019? Join over 100 investing and trading experts, including policy guru Steve Forbes, emerging markets icon Mark Mobius, America's best income investor Bruce Johnstone, elite energy analysis Stephen Schork, and trading visionary Tom Sosnoff at The Money Show Orlando to get the best ideas for protecting and growing your investment portfolio during 250 in-depth presentations. Claim your free pass now at orlandomoneyshow.com.